Hello, today I'm going to talk about a strategy that is popularly used and how to reproduce it in Jackrabbit. There are 100 different ways of accomplishing this, if not more. So my way is not the only way. It's just what I found works that replicates the information being covered in a video I'm going to show you. Now, I'm not going to play this entire video. I will put a link in the description so you can find it on your own and watch it.
Does MACD trading strategy even work? Are online trading gurus telling you fake information? I have wasted years testing every trading strategy out there before I found the right one that worked. I've created this channel to expose every strategy and show their real probabilities, so you don't have to waste your precious time like I did. I'm not here to sell any kind of online course. I'm just here to help you in your stock trading and forex trading career. If you find this video
Okay, now this video covers the combination of MACD and a moving average. The question was asked, can this technique be replicated in Jackrabbit? The answer is yes, it can. Moving averages and MACD. It can be replicated. This is not the only way to replicate it for the settings I'm going to show you. But the key components, your buy signals must be below your sell signals. Now you'll see with MACD, I have this linked already. I'm going to temporarily unlink it. Let's unlink it. And I think I missed a button on that. Okay, no, it just took a little bit of time to load. So you see MACD now completely unlinked from the moving averages. Now this has been tested to some degree. It's not been thoroughly tested. That is, I have not ran this 100 times, but I have examined it in every single time frame and in each and every case. I'm going to relink these now. The buy signals are always below the sell signals. And this is what you want to put your alerts on. When you make your alerts, you want to make them on the MACD, because this pulls the signal line in from the moving averages. Now, the higher the time frame, the more potential profit this trading strategy uses. Can it be improved? Yes. But I emphasize one important thing about the word improvement, and that is strictly speculative on the individual's personal preferences in relation to their trading paradigm. I personally find it, as it is, quite resilient, comparatively speaking. Is it the best out there? No. But if you go by the statistics of the video from the gentleman that tested this, it has a 62.5 success rate. That's not bad. That's pretty good. Now, he used 30 minutes in his video. So I have this set to 30 minutes, but it can work just as easily on 1 minute, 5 minutes, 1 hour, or 1 day. It is very resilient for time frames. For example, a lot of people like the 2-hour window because it gives good trend opportunities and a bigger picture of the market. I'm going to go back to the 30 minutes for the point of this discussion. And I'm going to scroll through these charts first. Okay, here we go. Now, the buy signals must always be lower than the sell signals. That's signs of profit. So when you're looking at your numbers, if you see a buy signal above a sell signal, that's an automatic loss. Now you can use dollar cost averaging to help balance your trades. As you can see, it's fairly consistent. It does a fairly good amount of trades for the time frame you pick. Again, this is the window you want to see in relation to when it trades. And then compare it appropriately to the cost average. So your alerts must go on the MACD. As you can see, it does fairly well. Even when the market is really totally garbage. Now, the original video uses an EMA 200 as its basis.
Video.
Right here, this line is an EMA 200. Jackrabbit by itself doesn't support a single moving average like this, unless you use the 37 rule, which is what I've used here. Now, I've used the sine wave moving average, which is basically a poor man's mesa. And I'm going to scale this in and zoom it. Let's find a buy signal. Sine wave moving average, as you can see here, it looks for when the market comes down and begins turning directions. And that's where the buy marker is, right at the point of the pivot of the decline to the upswing. Let's see if we can find a better one. Okay, here's one. You get a better bow, and then you see the sell here. So here to here is the market direction. So as you progress and you're watching various situations. For example, here you see 3 purchases. These would be averaged together. And then finally the average would be sold here. Same thing, this one and this one averaged together and sold here. Now, is this going to always win? No, it's not. As you can see, some trades might give you a good, decent profit. Others might be questionable, like the one I just showed you that did 3 buys. Some trades, this up here looks good. This one down here looks like it just might barely make it. That's just part of the risks of the strategy. It's a balance, an average. And that's always what trading is about. The final average of your profits. For the most part, this process works very well. And this strategy is resilient to a lot of things. For example, let's go to the Black Thursday area. February and March. Here we go. You can see throughout the process at the 30-minute mark, there's really only one questionable trade. The rest of these trades actually look pretty decent. So as you look and you see, and even when you look here, it completely skips this altogether. So even though it shows them here, your actual signals get out right here. So you miss the entire Black Thursday drop. Because as you can see, right here, point blank, all completely messed up from Black Thursday. Makes the purchase right here. See it right here, the one alignment, and you see where it gets out of the market. So it's a very nice little resilient process. Not perfect, but definitely resilient. So I definitely recommend trying this out, testing it, and whenever you look and watch videos or read content, try to see if it is supported and try to see if you can rebuild what you've been shown in your algorithms. And you might end up finding something very resilient compared to the original, and maybe even a little better. Because so far in the back analysis, this actually looks a little better because it's missing a lot of the nasty stuff. For example, sells here, buys here. But right here, you notice the actual signals. It sells, it skips this entire mess. All of this mess right here, completely skipped and avoided, comes back in right here. Skips all this, comes out right here, gets a decent little profit. Simple, elegant, not all that complex, but it works well. So be sure to look for these kind of things when you're trading. Watching other videos can give you ideas and inspirations. So let's go back to the beginning. Let's go to the 4-hour chart. A lot of long-term or long-space trading occurs here. This is where a lot of people put big money, literally $1,000 positions. So for a $1,000 position, buy here, sell here, boom, you're in, you're out. Buy here, it waits until it sells here, and it gets a pretty good little profit for this run. It takes a couple of months, but it still does quite nice. So if you're into long-term trading, this is also an option. This works on every time frame. Let's go back a little bit. Here's the entire Black Friday mess. No, it buys here, it buys here, only buys here. Then it sells here, but this is a profit. So it's actually making a profit here, even though you don't see it all that well. It's a very thin profit. But still, any profit in the middle of this mess is a saving grace. A lot of people lost hundreds of thousands of dollars throughout this time frame. So this definitely is one for the books to keep. Let's keep going back. We're in 2019. You can see not a lot of good places. It actually, last real decent buy was here. And then the first reasonable sell was here. So 6 months on a long-term hold. I personally would not trade long-term, but for somebody that has the capital, that could bring in some very nice money. Now let's look at the daily chart. Same thing. Look at the duration. This one sat for a year cooking. Take a good look at that. 1 year. So on a daily chart, going all the way back as far as TradingView has history that this chart can use. One trade is all it made. And that trade was a pretty substantial one. So any time frame. When you start getting down to the smaller time frames, you'll notice that it's not as active, if you will, compared to some of the larger ones. For example, the 5-minute one. That's good. But as you can see, it's a quiet one. Not a lot of purchases. This is a surgical strategy, not a strategy that necessarily looks to make rapid trades. And as you can see right here, it gets out right before a drop. A pretty significant drop at that. So it does very well. I definitely encourage you to take a look at this strategy and run it through a paper tester. It's certainly worth taking a difficult coin and putting it into this kind of strategy. Let's take a coin that has a known history of being difficult. Okay, let's go to Binance Exchange. And let's find Theta. People love it, people hate it. It has its following, but it has ups and downs that make it a difficult coin to trade. Neo is another one, and we'll take a look at that. Here you have it. One purchase, one sell, and it will be for a profit. The reason I know this is a profit is because the buy is below the sell, and there's a special setting here inside the moving averages that I'm going to show you very shortly. Now that setting can be a double-edged sword, but in this combination, it really works well. So here you have Theta. It's not all that fast of a coin. There are simply not that many good entry points. Not at the 5-minute level. But the entry points that it does make, it makes sure they are profitable. Let's go back to the 30-minute level on Theta. Again, your alerts are driven by the MACD. The moving averages is pulled into the MACD for the signal line. Gets out right here, gets out right here, doesn't buy till all the way down here, makes a profitable sell. Important but specific. Again, not a lot of purchases. Theta is just not a good quality coin for reasonable in and out transactions. So this kind of a surgical approach works well. The 1-minute chart, you don't see very much. I don't know if I personally would use this on the 1 minute chart. It's pretty blank, pretty barren. I think I personally would stay to a minimum of the 5 minute chart. Just because it gives you a better outlook and better trade potential, in my opinion. Okay. Now let's go back to Binance US. Actually, let's go to the 1 billion market cap coins. A lot of people have problems with Monero. It's a strange coin. It tends to get stuck in channels quite often. Here's a good example. The channel really doesn't go very far. And it just kind of stays here. But as you can see here, it purchases, it sells. But notice here, it did not purchase in this area. It just wasn't strong enough. As you can see from looking at the number of days involved, you're dealing with 7 days of history right here and only one purchase. So within a 2-day period, it makes a purchase and a sell, and then for the rest of the week, it just sits there doing nothing. So this tells you a lot about the coin. Very strategic, very surgical. Here, this coin had no activity whatsoever. Very slow coin altogether. In fact, the last confirmed purchase of this coin was right here. June 4th. June 4th, bought, sold, bought again on June 4th, and it's sold off here on June 8th. A purchase has not taken place since. So for 10 days, this coin went nowhere. So let's get into the details. First is the moving averages. So all of this is pretty much your cookie cutter default. Until we get to here. The fast moving average is the sine wave moving average, SWMA. Again, this is the poor man's Mesa. This gets ignored because we're using the 37 rule. So all that matters is this one right here. This gets ignored because we're only using this. Now the fast line moves at 27. But here's where things happen. Signal deviation. I set this to 1%. That means for the moving average, you are guaranteed that the difference between this sell signal and this buy signal is at least 1%. What you are not guaranteed is the direction. So let's see if I can find a good coin. Okay, let's go back up to the higher time frame. And we're going to go back to those settings. So you're guaranteed that from here to here is a minimum distance of 1%. You're guaranteed from here to here is a minimum distance of 1%. Now you're guaranteed from here to here is a minimum distance of 1%. But notice the signal was not strong enough here. So signals will not show up unless they make that 1% deviation. That's a sneaky little trick that helps you guarantee you're not going through whipsaw. Your signals will be a minimum of 1% apart. This is literally all of the settings of this whole system. Come back here. Nothing else. No time frames, nothing special. Put your fast moving average to SWMA. Put the algorithm to the 37 rule. Put your fast line to 27. Put your signal deviation to 1. You now have your moving average set up as I have on this chart. So I'm going to leave this here for a few seconds. Be sure to pause the video, write these settings down, so forth if you want to use this method. Okay, you don't need to worry about the slow line. Whatever's here is worthless. Whatever's here is worthless as well. This controls everything. So, sine wave moving average, the 37 rule. Use your fast line of 27, a signal deviation of 1. Nothing else in this configuration is changed. Everything else is default. Okay. Now let's go to MACD. Here you're using the IOI system, indicator on indicator, and you're telling MACD that you want to use the moving averages signal line. So MACD is pulling in the signal line. All the rest of this is default until we get to here. Take a good look at these settings. Your fast moving average for MACD is a triple EMA. Your slow moving average for MACD is an RMA. Your smoothing moving average is an SMA. Your fast line is 27, just like here in your moving averages. Your slow line is 273. I had to play with this to figure out a good combination that lined these up appropriately at good entry points. Getting these numbers is just trial and error until you get your alignments to where they look reasonably consistent. The smoothing is 23. Again, trial and error. That's it. The only other exception is down here. I kept the buy signal for 5. and I kept the sell signal for 5. The reason I have these set is for alignment between the two different modulus components. So 5 and 5 means hold on to the signal for 5 candlesticks. That gives you an alignment of the moving average. Let's go back up. Now I'm not using confirmation bias at all here on either of these. Simple, basic, straight level indicator on indicator, both sharing the same time frame. Triple EMA for your fast moving average. RMA for your slow moving average. Your smoothing line or delta line, SMA. Your fast moving average of 27. Your slow line or slow moving average of 273. Your smoothing factor 23. That produces these results that you see here. Now, as far as the candlestick bars, I'm going to turn this off so you can see the impact and effect of holding that signal. Okay, let's zoom this in. You will see 5 candles. That lines up with this one right here. Let's come back a little. Let's find a buy signal. Okay, let's find a buy signal that lines up. This one did not line up. This one shows 2, so we're going to ignore it. Let's find one that lines up. Here's one that lines up, and it's just within the reason of the candles. So we don't want to go for too many. If we put too many candlesticks for holding, it dilutes the signal. This is just right for this particular setting. So we'll turn this back on. It's working, and soon all the rest of the noise will disappear and only the one will line up here. So there you have it. Very simple, very effective. And it does exceptionally well. This is a surgical strategy, not a scalping strategy. This is a good example. Here's the buy, but not here. This is a perfect opportunity to get in, but not down here. The signals did not match. That's important. They don't match until they get to here. And then immediately later, it gets out of it. Let's zoom that in. And remember, with the moving average deviation, you're guaranteed 1% difference between this price action and this price action. But let's see if we can find the sell signal that lines up. Okay, the sell signal lines up here at roughly 9,200. Let's see if this buy signal is going to be profitable. Just below 9,200. Probably around the 9,100 mark. So while it's profitable, Here it only shows about a 400-point difference. So again, just barely above the line, but it's still a profit. It might be a loss by the time fees are factored in. So again, this is not going to win every single trade, but the combination should win about 60% of the time. So let's go back to the MACD settings first. Indicator, unindicator, and the moving average signal line. All the default until we get to here. Your fast line is a triple EMA. Your slow line is an RMA. Your smoothing is an SMA. 27 for the fast line, 273 for the slow line, and 23 for the smoothing. And you hold the candlesticks both for buying and selling for 5. Hold the signal for 5 candlesticks. There you are, nothing fancy. Again, there are different combinations that will produce the same results. This is just a combination I found. So let's get out of this, go back into moving average. All the default stuff until we get to here. Sine wave moving average, ignore this. The 37 rule. 27 for the fast line, ignore this. Signal deviation of 1. Will the 2 work? It might not, I don't know. Try it. I know this works for comparison of the video and for the request of can that trading style be implemented in Jackrabbit. Nothing else has changed. All the rest of this is default. Okay, we'll get out of this. One more time for MACD. Try it out. Put it in a paper trader. See how it works with your most difficult coin. As you can see from the buy signals, it does not need a lot of a budget to run. The highest I think I saw was 5 different buys before it ran into a sell signal. So it's a very low budget algorithm. Remember, your fast moving average is a triple EMA. An RMA for your slow moving average, and an SMA for your smoothing. And you're using candlesticks for buying and selling to be held for 5 candles. That's it. And you have the results here. Test it. Put it in a paper trader, try tweaking it, see how it works, but I think you will find this to be a very nice, neat little tool to have in your arsenal. It works very good at any time frame for coins that may be particularly difficult. It only gets in when the signals align up, and it gets a best position it can. Some coins are not going to produce good signals. That's the reality of it. That's a realistic fact of this algorithm. That's why you want to use this algorithm. Now for BCH, where BTC did not produce a signal here, BCH did. And as you can see, it got a nice little bump. So be sure to look at your coin choices. Again, I recommend only the top 13 coins above 1 billion market cap. Lower coins like Theta are tempting, but if you don't have the experience necessary to handle its risk, it can be dangerous. It can cause losses, so you want to be aware of that. Don't just apply for it, trying to buy and sell any coin. Take the time to do your research. Take the time to find the coin that best fits your risk assessment and that best fits your financial situation. There is no substitute for careful research and due diligence. Until next time.